But let's take a step back and try and assess what the global markets and, of course, India as well are hinting at. And we've got Andrew Freris joining in on the show right now. Andrew, hi, good morning. Good to have you on ET now. Andrew, once again, the escalated situation between US and Iran and the damaging factor, I guess, is crude. Do you sense that crude could further spiral up more than the 5% that it already has?
No, I'm going to be very safe ground because United States bombed uh, extensively certain targets in Iran about 2 months ago, and nothing happened. How much they are planning to go out now, uh, we don't know, and they may very well do. Now, one thing we do know, okay, and I will repeat that we do know, in the last 3 years, the world has got quite accustomed to wars. There was a sharp escalation between India and Pakistan. Nothing happened. Russia is still attacking viciously Ukraine. Nothing has happened. The Israelis, after they completely ruined Gaza, they're back there, and effectively nothing has happened. So what we are looking at is the concerns that the United States may bomb Iran. Well, they're very welcome to it. I'm not for one moment suggesting this is a good idea, neither I think it is a light issue for people to die, but I think the markets will simply ignore it. It's as simple as that.
Okay. Andrew, the other development in terms of the macro news that we're seeing coming in from the US is the trade data, the jobless claims data, both looking weaker than expected. And later today, we're going to be seeing the GDP, PCE numbers, and a potential ruling on Trump tariffs. How do you think all of this is going to play out for the US equity, and then what could the spillover be globally?
We have a pretty good idea what we're going to get. I'm not saying that by no means I'm outguessing the guesses. Okay, the personal consumer expenditure index, which is supposed to be the favorite ones of the Fed, we hadn't had it for nearly 2 months because, of course, there was the breakdown in collecting the data during the closure of the United States government. And that index has gone up, down, up, down, up, down, with no specific trend. I suspect we might get also a trendless number, something that will not indicate that the index is going down. In any case, the Fed has seemed to have ignored completely and has concentrated any comments they had on inflation on the CPI, both the plain vanilla and the core. Now, the deficit in the global trade of United States is something that only bothers Trump. And so we would keep it there because it is a meaningless number to hang anything on that, especially if the overall deficit with China has come down, and that is completely a political issue, again, not an economic issue, and because the fact that the United States buys more than it sells means absolutely nothing except to Trump. If anything, I could tell you, give you a very simple story. The rest of the world is selling to United States goods, nice goods, fast Italian cars, beautiful French wines, very nice Italian fashion. And in return, they receive pieces of paper with an IOU, IOU. In other words, the United States buys them on credit. It issues credit and takes in the goods. I think that's one of the best things that a country can ever do. And of course, it's very important because everybody else is willing to accept the pieces of paper. Now, for the rest of what we're going to see is I suspect that inflation and the state of the labor market are going to balance themselves out. And what I'm telling my clients is the Fed is not going to cut interest rates for several more months. It's as simple as that.
Andy, how do you look at crude in this entire scenario? You have Russia, which is reducing output for crude. There are already reports about the OPEC meeting soon to increase output in April. Again, you have, because of the geopolitical tension, the Brent is about $71. Do you think, this is just a temporary situation where the Brent has gone up or the crude prices are inching higher? It will come down subsequently as OPEC increases output?
Consider the fact that United States is very neck to neck with OPEC as being the single biggest producer of oil in the world. Therefore, should they decide to switch to autarky, and therefore avoid any increases in their prices, they can do this. That's why I personally, when I speak to my clients, I don't want to spend too much time on the price of oil as a particular input into global inflation. Okay, because that is something that has been taxing everybody except the two countries that are particularly most, let's say, near to it. China, that has deflation for I don't know how many years now, nearly 5 years. They're doing absolutely nothing about that. And the United States, that has quite a strong GDP growth and effectively high inflation above the targeted by the Fed, but still in global terms, 2.5, 2.6, 2.8 year-on-year inflation is hardly anything to be terrified about.
Interesting. Okay, Andrew, great to have you on the show today. Thank you so much for joining in with that insight.
It's a pleasure.
Okay, let's just address what else has